Hey everyone, and welcome to today's Explainer. We're going to dive right into something we literally all use every single day, but kind of take for granted. I'm talking about the hidden digital mechanics that actually power our everyday financial transactions. It's like a massive, invisible machine working right under our noses.
So, let's kick things off with a pretty fascinating question. Think about it. When you tap your phone to grab your morning coffee, or swipe that piece of plastic at the grocery store, where does your money actually go in that exact second? Seriously, it feels like pure magic, right? But there's this entire incredible journey your money takes the very moment you hit pay.
Which brings us to Section 1, from benches to virtual banking.
Okay, so get this. Traditional banking quite literally started on wooden furniture. No joke. The word bank actually comes from the French word banco, which translates to a bench. Back in the early days, moneylenders would sit outside, piling heaps of different coins on benches or tables to lend and exchange them. That humble wooden bench? That was the world's very first financial hub. Pretty wild, right?
Now, obviously, things evolved. From those simple little benches, the concept grew into these massive, towering financial institutions. These huge physical banks became the absolute pillars of our economy, and their main gig was managing the basics, accepting deposits from the public and advancing loans to businesses. But, as you know, we humans love convenience, and our need for speed pushed us way past those heavy stone pillars.
Moving on to Section 2, ATMs and plastic money.
Picture this. You walk up to a sleek, modern machine on a street corner. You securely log in, and bam, it dispenses the exact cash you need. Or maybe you go the other way and slide a thick stack of notes directly into a cash deposit machine, or CDM. The ATM was really one of the first massive leaps into e-banking. It literally let us bypass human tellers altogether just to get our hands on some physical cash. And of course, all this physical convenience relies totally on that plastic money we carry around. Take a look at a standard black RuPay credit card right next to a bright orange debit card. On the surface, yeah, they just look like two identical pieces of plastic, but behind the scenes, they are doing completely different things.
The real secret is in the back-end mechanics. You see, a credit card is all about trust and leverage. The bank creates a revolving account and gives you a line of borrowed credit. Basically, you're spending their money now with the promise to pay it back later. But a debit card, that's a direct pipeline to your own active balance. When you swipe that bright orange card, the money is instantly deducted from the cash you actually have. No loans, no borrowing, just your own money moving electronically.
All right, let's shift gears to Section 3, the digital highway, fund transfers.
I want you to imagine a massive digital highway split into a few different tracks. On track 1, picture this giant gold box labeled 2 lakh rupees and above. The moment a transaction hits this track, it shoots instantly across the line. No delay, no waiting around. This is what we call RTGS, or real-time gross settlement. The minimum amount you can send through RTGS is 2 lakh rupees, and because it's in real time, it is super fast. Technically, the receiving bank has up to 2 hours to credit the account, but for all intents and purposes, it happens practically instantaneously.
So, RTGS is definitely the fast lane. It settles gross amounts immediately on a strict one-to-one basis. It doesn't wait for anybody else. But then we have what you might call the commuter lane. NEFT, or National Electronic Fund Transfer. NEFT operates on a deferred net basis, and what that means is individual transactions aren't just fired off one by one. Instead, they get bundled together.
Imagine track 2 for NEFT. Multiple smaller boxes gather in a digital waiting lounge. They just sit there, bundling up together, waiting for their scheduled departure time. The system actually runs exactly 24 half-hourly settlement batches, going from 8 a.m. to 7 p.m. on working days. And when the clock strikes the half hour, boom, that entire batch launches across the network to all their different destinations. It's an incredibly efficient system. It just requires that little scheduled wait.
And that leads us to Section 4, banking in your pocket.
This right here is the absolute pinnacle of modern convenience. Think about how we do things now. Maybe you're on a laptop at home, securely checking your monthly statements using net banking. Then you seamlessly switch over, tapping a dedicated app on your mobile phone. Let's say there's an emergency and you need to send money to a friend right now. With just a couple of taps, you fire off a lightning-fast transfer using the IMPS facility, the immediate payment service. You aren't waiting for half-hourly batches, and you definitely aren't walking to a physical branch. It is an immediate, instant transfer right from the palm of your hand. So when you put it all together, the automated sleek ATMs, that diverse network of plastic cards, the high-speed digital tracks of RTGS and NEFT, and those mobile apps, they all fuse together to form e-banking. It is, quite literally, a virtual bank. It's completely computerized, running 24 hours a day, 7 days a week, no matter where you are in the world.
Which actually leaves us with a pretty fascinating final thought to wrap up today's explainer. Think about the journey. We literally started on wooden benches. Then we built massive heavy stone institutions. But today, our entire financial lives exist almost entirely on our phones and laptops. So, with our money moving instantly across these vast digital highways, you kind of have to wonder, in the near future, will physical bank branches even exist at all, or have we finally outgrown the bench for good? Thanks so much for joining me today, and keep exploring the amazing systems that power our world.